community, what that means for the economy, and what it means for the stock market. We're joined this hour by Dennis Mitchell. He's the CEO and Chief Investment Officer at Starlight Capital. Dennis, great to see you. Uncertain times. What has been your overall impression of what we're navigating right now?
Certainly a lot of volatility, and justifiably so. I mean, everywhere you look, there's uncertainty. So what are central banks going to be doing, right? The Fed has paused. The Bank of Canada has taken the opposite tack and said, in light of what we're seeing, prognosticators, strategists, and economists have speculated that the Bank of Canada will probably cut more. Currencies, the Canadian dollar has sunk significantly. It's sort of the first shock absorber for this trade battle. And who knows what Donald Trump will say today, tomorrow, next week. So certainly justifiable that we've seen volatility in every single asset market, and people are concerned about what's next.
Bloomberg has a story today based on some data that indicates that some of the liquidity in the U.S. stock market is drying up. So you've got volatility out there, but I guess the question becomes, you know, especially for larger investors, professional investors, institutional investors, maybe there's a little bit less flow, arguably because of the uncertainty. I guess that raises the question, are you a long-term holder or are you a short-term holder? I mean, you've been through a lot of different market cycles. When you look at what you see right now and how the market is reacting to the current environment, what has history as an investor told you about how you navigate this kind of stuff?
Well, my answer is always short and sweet. You should always be buying high-quality businesses. But what I think you're seeing from a liquidity standpoint, I think you're correct. As uncertainty increases, people tend to take money out of risky assets. And up until recently, you were getting paid handsomely in high-interest savings accounts and GICs and such. As interest rates have come down, those investments look less attractive. So investors are thinking, okay, where can I put my money that is shielded from some of this tariff activity, still earn a yield, but not be exposed to a ton of volatility? And a nice segue into something I know we're going to be talking about later. Increasingly, we've seen that as private assets have become attractive to investors as they leave the public equity market.
It's a really important theme because so many of our viewers were asking questions around things like GICs, call it a year ago, and now they're thinking about where else to be putting some of their investing dollars. So I look forward to talking more about that part of the market. I guess when you look at the Canadian economy right now, obviously we're into a snap election cycle, and we'll hear a lot about the game plan from various parties on how to deal with Trump, how to deal with the economy. But what's your general sense on what's going to happen to Canada's economy?
Yeah, I think the OECD put it succinctly when they did their March update on global GDP growth for 2025, 2026. They lowered global growth expectations, U.S. growth expectations, Canada, Mexico, and a lot of it was tied to sort of the ongoing trade war that's coming out of the United States and its impact on other trading regions like the Eurozone, but more specifically North America and Canada and Mexico. So I think the outlook was lowered to 1.5% GDP growth this year, and then less than 1% for next year and the year following. That's not good, right? It's far below potential. And in that type of environment, businesses aren't incented to invest for growth. And as a result, employees and labor can't expect significant wage growth. And so it puts downward pressure on consumption, which drives our economy.
It makes me, because you talked about it earlier, central banks as part of the equation as well. If you're the Bank of Canada and you know that there is the possibility of a cooler growth environment, obviously that's going to be a concern to them. But throughout all of this, we've also heard, but what about inflation? So how do you navigate that if you're the Canadian central bank?
That's why I've never applied for that job and never will. Look, I think you have the one job of price stability, right? And so I think you'll be looking for, is this going to be an ongoing issue? Meaning, are we going to have to deal with this for all 4 years of Trump's term? Or is this going to be something that he's fixated on in the first term and then later on pivots to other priorities? I think if you think that the inflation is going to be one time and then a shorter in duration, then you're focused more on spurring domestic growth. If you think that this is going to be an ongoing issue that is going to push inflation up steadily, then I think you're going to pause cutting interest rates and you might even have to hike.
Now, it is prudent, so we'll watch to see what happens there. It is prudent to plan for all sorts of scenarios, but I was even watching some of the programming from our Bloomberg partners today where there seemed to be an argument from at least one strategist that I know there's a lot of uncertainty in the air, but we don't buy into it Whole hog. Like we're not as concerned perhaps as some might be that we're headed towards a worst case scenario, almost to suggest that maybe we'll see some kind of resolution to the tariff story. I guess the challenge is we don't know what we don't know.
Right.
If you're in the markets.
But did you hear, not to pick on you, but there were lots of ifs and maybes and we don't know.
Yes.
And this is why I always say, like, the macro is nice, just get the direction right.
Yeah.
Right? So we know we're in for some sort of trade disruption that is likely to be inflationary. We know that as a result, global growth and Canadian growth is going to be reduced. And we know that the Bank of Canada has said, in light of what they're seeing, there is the potential for them to cut interest rates more. That's all you need. Right? After that, you take that information and you go out and you buy great businesses. Companies that have strong recurring free cash flow from a portfolio of irreplaceable assets that are capitalized with sustainable levels of debt and are run by management teams that behave like owners and treat you like partners. Those are the businesses you want to invest in all the time, and certainly when uncertainty is high like it is now.
Well, it's great to have you on the program because we get a chance to talk about examples of those kind of businesses, which we will do a little bit